All right, and finally today, going into May 9th, trading for the close on May 8th, Tuesday, our day would not be complete without, of course, Apple, its own index. Although it's been rough for Apple as we predicted it would be right after earnings when we predicted that 620.25 was not busted, and the high was 619.95. So sorry we missed that by 30 cents. We said to strongly consider selling into the topping anywhere from 610 to 620 and look for a massive drop that would eventually take us to 520. We got all of what we predicted in almost a week's half of what we predicted in almost a week's time following earnings, and now as of today Apple went down even further as it found a level of 558.73. Now, there's the black line or black circle. I want to use it again right away and show you the ideology indication of this, how these come together. And there you see it. 558.73. Apple did hold the bottom of the Bollinger Band, which is 551.32, and this stock has traded relatively dead on it. Today, I don't look for the Bollinger Band to hold. I don't therefore look for 555, the recent low that actually came ahead of earnings, to hold. Once 555 is gone, we have taken out anybody that decided to buy Apple into earnings for the 555 move to 620. We've also taken anybody out in the psychology of it that bought at the 555 area, was looking for new highs, didn't get 620 plus, and now they're going to be washed out on any loss of 555. So I really think that the first retracement point on this range here to here, the high, which is the 542.31, is a lot closer than Apple investors may think. In fact, I think that level could come today. We would be at an oversold level on the daily if we got down to the 520. So as much as I hate to say it for Apple bulls that did not listen to the strong indicators that stated with this channel that we would see 520, it looks very much like we're going to see 520. So remember, the way that this range will stay bullish for a year and stay absolutely gorgeous actually will be any hold of 579.53. What I love about this chart is that's over a 50% retracement of the year high low, which, believe it or not, on Apple is 310.50. So the best retrace we could possibly have is anything that holds 477.25. I don't see Apple getting that bad. Then again, that level that really sticks out to me is that 451.80 spot, which is the 200-day moving average on Apple. But we won't look at that right now. I really believe we're going to get a big bounce on any hold of 515.78, which would be a 100% retracement of the December low that was the second indication off the channel. I don't like how it didn't catch the channel here. I don't like how it didn't catch the channel there. I don't like how it didn't catch the channel there. We got an indication here, but we did not get identification and follow through that it was true until we got here. So it was a hypothesis that became a thesis on this chart when it hit that point there. There's where Apple busted out off of that low. We want to take the low in the range and use the bust out point where it busted up through the top of this channel and actually created a move double the size of the channel. So this level from here to there is almost exactly double. So a really solid retrace level, you can see, would be 477.25. But again, the first retracement level that we're going to look at is the green line here, and that's 516.60. So again, Apple 568.18, pretty good size volume yesterday. What we'll look for today on Apple is again the 551.32 not to hold, and meanwhile the 555 not to hold. The loss of that should take us down. I'll look for a bounce today at 542. It's going to be a dead cat bounce back up to test, most likely, and make former support new resistance on the 50-day moving average. but that's what I'm looking for. We'll pull down and take a look at the MACD here. It's still in what we call free fall, and they're actually divided even more now than they were. You can see it up here as it rolled. So that's not good at all. That's extremely bearish. And the money flows are what are really curious on Apple. And what that tells me is that the move up at ahead of earnings that bounced underneath that 50-day moving average was shorts. Meaning this level right here, when that busted, shorts got, or I'm sorry, right here, when we went from the call it the 579 area, when we had the 50-day moving average prior to earnings, down to the 555, the shorts that were in this stock said, okay, I'm going to cover, I'm going to take my profits, I'm going to get long. They got long, and you see the huge squeeze ahead of the great earnings, and then the big move up. You see the black line, which is a doji indicator, double doji, and then straight down ever since then. Now, the question is, and the answer is pretty easy, are those shorts that covered up in, that literally covered down here, went long, and then did not, basically stay long, they got short again, selling into the strength, are they going to cover on the loss of 555 today? I don't think so. And I think you're going to have more shorts come in, and you're going to see 542 probably as early as today. So I would strongly recommend staying away from Apple on the long side. And again, our 520 is a lot closer than most people think. And of course, I know I was called crazy to say this thing after earnings would pull back 100, but we're less than 40 points from just there. So again, that's Apple, and Apple stays red for bearish. We will leave it that way, and this has been your Apple Daily TA update for the close on May 8th, 2012, going into trading for May 9th, 2012. More to come.